Welcome to Founder Fundraising Feedback. My name is Steve. I'm known as the Hands-On Angel, and I've spent the last 9 years talking to 6,000 early stage founders, predominantly at the pre-seed stage, about early stage tech investing. I've personally backed 69 companies to date, and those companies have raised a combined $1.4 billion, that is with a B, and I've had 11 exits to date, and those exits have been all over the place. $15 million, up to $400 million, and everything in between. So if you were new to the room, welcome. If this is your second or third or 10th time, welcome back. Thanks for joining us on this Thursday evening. I hope everybody's had a good day. How does investing work? Do you make a contract when you get a piece of the cash flow? I don't. So the way I angel invest, and it's just my way, it's the most common way that investments get done, is I put a certain amount of capital. I've invested in 69 companies to date. And in exchange for that capital, I get equity in the company. In most cases, because I'm investing at the pre-seed stage, which is the earliest stage of venture capital, I get equity in the company in exchange for that capital. The minimum amount of equity I've ever gotten in a company is 0.5%. The most amount of equity I've ever gotten in a company is 8%. It just depends upon the round, the dynamics, what they're raising, what the valuation is, how much money I'm putting in. There's a lot of factors. Is spending time on growing sales always better than spending time on fundraising? Aladdin, that's a great question. I would argue that talking to customers, increasing your revenue, and driving sales is always a great use of your time. I'm not saying it's not an either or, it could be both and, but think of it this way. Every $10,000 in revenue that you can generate from customers, it's like an angel investor writing you a $10,000 check that's non-dilutive. That's the way I would think about it, honestly. So is it a better use of your time? I think it's a less expensive use of your time. That's the way I would put it. And the return on investment for you comes from when a big exit, right? So I've got 11 exits to date. Of my 69 companies, 11 of them have exited. The exits have been everywhere between $15 million and $400 million and everything in between. Just depends. I'm an angel investor, so it's all my own personal money. I'm not a fund. I'm not a VC. So what I like to say is any X is a good X, as long as it's a great exit for the founder and for me. We have a sort of aligned interest. That's really what my opinion is. Royalty-based funding, I haven't done it. I'm not really an expert in that space. I probably wouldn't be the best person to talk about that. I tend to stay in my swim lanes, which is things that I know about, I have context in, and most importantly, where I can provide ridiculous value to the founder. What's the difference between a super angel and a VC? So Coogan, great to see you again. Thank you for joining. Welcome back. And welcome back to all the founders that are here to ask questions tonight. So Coogan, a super angel is just an angel that writes a bigger check. I like to consider myself a super angel for two reasons. One, I've made 69 investments, so I think I've got volume. And I would like to say that I provide huge leverage to my founders, because the most valuable thing I'll ever provide a founder, it's actually not my check. It's access to my network, which is global, which is vast, and which is incredibly helpful. It's the most important thing I will ever provide to my founders. And because of that, I like to consider myself a super angel. One of my good friends, Jorge, who's a co-investor with me in a couple deals, actually said I'm a force multiplier. He's like, you can 10x any business that you touch because of your network and because of the introductions you make. It's probably one of the nicest things anyone can ever say about me. A VC is a venture capital firm. They are investing what I like to call OPM, other people's money, into companies. They tend to write bigger checks, a little bit later stage, seed, Series A, Series B, and so on. Some of these venture capital firms could be 100 million, 500 million, $1 billion firms. So they can really change the trajectory of a company. Is it okay to share my proprietary ideas with potential investors? How do I do it safely? Now, here's the dirty little secret. Don't worry about it. Your job as a early stage founder is to get your product out in front of as many customers, many opportunities, and as many investors as possible. Do not waste time on non-disclosure agreements, which nobody will sign, trademarks, patents, which are very expensive and take a long time. Your job is to get it out there. Build a better product, build a better onboarding experience for your customers, and that is how you protect it, honestly. Don't worry about it. Your job is to get it out in front of as many people as physically possible. So for those that are new to the room, I'm Steve. I'm the Hands-On Angel. This is Founder Fundraising Feedback. And for those that have been here for a while and haven't grabbed a copy of my free newsletter, it's right here at the bottom of the screen. It's this little yellow up arrow right here. If you click on that, you can grab a free copy of my newsletter. It comes out every Wednesday. All types of tips and tactics on how to fundraise, where to find investors, and what investors look for. My gift to you is a thank you for coming on the live tonight. What's the best time to ask for funding as a company? When something is happening, what I mean by that is, in order to get an investment, you have to be investable. Something has to be happening in the company. Now, that could be something as simple as revenues increasing month over month. Cost to acquire customers is going down. We have a massive wait list. We can't keep inventory in stock. Like something is happening that makes you think, outside investment probably makes sense at this point because we could grow 2 and 3 times faster with additional money. That's really what I would think. It's not really a dollar amount. It's a feeling about what's happening in the business and what you should do next. How do you account for key person risk when investing into a company? I think you want to know, do the founders have a founders agreement? How do they know each other? How long have they worked with each other? Have they worked together at a prior company? Like, what is the bond that when things get tough is going to keep this founding team together? And have you identified that there's one founder that's extremely important to the company, and I don't want to say the other ones are weak links, but they're less important. And if that one founder left, what is the key person risk to that company? I think you want to identify that early. Do you think with AI, we can scale to a global business without being funding needing before? Can you scale to a global business? I mean, I'm a global business and I'm a sole proprietor, but I'm a services business. I won't ever build my company into $1 billion. Can I grow it into $2 million, $3 million? Sure. But if you want to be venture scale, true venture scale, can you do it without raising outside funding? I would say it's going to be hard, even in the age of AI. That's just my opinion. Thank you so much for the question. How would a startup gain customers in a heavily regulated or trust-driven industry? The same way you gain them without a trust-driven or heavily regulated industry. Build social content. User-generated content can be a very powerful tool. Take your phone when you get off this live, of course. Record content, not about you, but about the problem your product or service solves for customers. Put it on social media, cut it up yourself on things like TikTok, on CapCut, and put it on platforms like TikTok, Instagram, etc. 3 times a day, 5 days a week. To get interest, have a call to action. Join our journey. Try our beta. Here's our website. Try different CTAs with different types of videos and see if you can get people interested, get traction. You can test out pricing. That's exactly how I would do it. What methods do SaaS angels in Europe use for validation? Scorecard, market size. I think, so for me, Coogan, honestly, I can't speak for Europe. I'm in the United States, but what I could tell you is knowing a lot of my investors and my investor network's pretty global, it's pretty simple. We look at users. Are they growing? We look at revenue. Is it increasing? We look at CAC, customer acquisition costs. We look at LTV, lifetime value. And we look at CAC to LTV. What does it cost you to get a customer versus the lifetime value? Is it growing? Do you have a path to profitability? Like all the standard metrics that you would think a business owner would want to look at, we look at. That's how we evaluate it. Will VCs invest when a company is adjacent to one of their portfolio companies? Jeremy, great question. So Jeremy, I have 4 or 5 companies in my portfolio. I have 69 portfolio companies. I have 4 or 5 that are in the same space, adjacent. Because I can't tell you who's going to win the day. I can't tell you whose product or service is going to be the one to get alpha. So you place multiple bets. Just like sitting at a blackjack table, sometimes you'll play 2 spots to place multiple bets on seeing who will win. Same thing in startups. So VCs, funds, family offices, and angel investors will place bets in adjacent industries. That's a very good question, man. Do I know any investors that invest in fashion brands? I do know a couple. I invested in a fashion brand called Nude Bar out of New York City. My friend Erin is the founder. Great company. She's building undergarments for people with different skin tones and skin types. Met her through Jason Calacanis, the same J Cal from the Launch Accelerator, from the All In podcast. I did my first 10 angel investment with Jason. I met Erin through Jason. She went through his accelerator. So I've done minimal investments in the space. So I know a little bit about the space. I would call it enough to be dangerous. Is it worth giving up part of the company to scale faster? Great question. Look, it depends upon what type of company you want to build. If you want to build a services business that does $1 million, $2 million, $5 million a year, you don't have to raise outside venture. However, if you want to build a company that does 50, 100 million, 500 million, $1 billion a year in revenue, you're probably going to need outside investment, AKA other people's money or venture to do that. Only you can make that determination for your company. Every situation is different. You have to decide, are you willing to give up a portion of your company because you are selling equity in your company? It's almost like getting a parent or another boss that now you have to report financials to, tell them how the company's doing. Now, for some founders, that's fine, but some founders are like, I don't want to go through that. You don't have to. It's all an individual decision. But yes, can it scale your company faster? Absolutely. What do you like to invest in? First time here. Well, first of all, welcome to the room. Let me give you an analysis of what I do, where I invest, if it can be helpful. I spent the last 9 years talking to 6,000 early stage founders, predominantly at the pre-seed stage, which is the first real round of venture. In that time, I've backed 69 companies. So I've written checks into 69 portfolio companies. Those companies have raised, with my help, a combined $1.4 billion in capital, and I've had 11 exits to date. Those exits have been all over the place. $15 million to $400 million and everything in between. The area, so I invest at pre-seed. The types of companies I like, 80% of my investments have been B2B, businesses selling to other businesses, while 20% have been consumer businesses, CPG brands. The types of industries, sports tech. I'm a former college athlete. Ed tech, my dad was a principal for 35 years. Health tech, APIs that connect wearables to insurance companies. Prop tech, real estate tech, fintech, financial services. Those are probably the top verticals that I've invested in. Doesn't mean I won't consider other ones, but those are the ones I've been most active in. Am I investing? Always. I mean, I look at 30 deals a week. I'm currently involved in 4 fundraisers. 2 of them are for current portfolio companies of mine, of my 69, and 2 of them are for new clients. 2 of them we're doing pre-seed rounds for, which is the first real round of funding, and 2 we're doing seed rounds for, which are clients that I raised pre-seed rounds for 3 years ago that we're now doing seed rounds for. How do investors look at consumer AI in a world that is already raising for it? Look, evaluating AI companies is hard right now. It's very hard to evaluate who's real, who's full of shit, who is just putting a wrapper on an LLM, one of the 5 LLMs out there, and who's building defensible tech. It's probably the biggest challenge with AI. It's the biggest opportunity and at times the biggest challenge. I built a platform for SMEs. How do I find investors to scale it? Well, it depends. If the platform does not have users and doesn't generate revenue, I would not approach investors yet. If the platform does have users and generates significant revenue and is growing fast, where do you find investors? The 3 top places I would suggest, besides TikTok, because you're talking to one, is LinkedIn, because you can sort by location, you can sort by investor type, angel investor, VC, venture fund, etc. And then you can find out common connections between you and that investor and reach out to the common connections and ask them for ask them to connect you via a referral. The second one is Signal FX, SIGNALFX, which is a website where you can sort by stage, pre-seed, seed, Series A. You can sort by whether they lead or not. It gives you the investor name. It gives you their social profiles, etc. So those, and the last one is Crunchbase, crunchbase.com. It's another place where if you have competitors in your space, you can find out, did they raise money? When did they raise? How much? And who did they raise from? Because a lot of times investors will place multiple bets in the same space. I hope that's helpful. How do I do a feasibility study? What's the next step? Reach out to people on LinkedIn. LinkedIn is probably the easiest place because most business people hang out there. Reach out to people on LinkedIn. Be authentic. Tell them what you're doing. Tell them why you're doing it. Most importantly, tell them you're going to do it for free. You want 15 minutes of their time to do an impact study. This is why you're doing it. This is what you do. The biggest thing I would suggest, you have to be authentic. Authenticity is everything nowadays. One of the reasons why I'm able to serve founders is that I'm not everybody's cup of tea, but at least when they talk to me, they feel that I'm being authentic. I think that would be my biggest guidance. Is there still a bias in VC against single founder startups? Paul, Sydney, and Travels, I would say yes. Paul, let me tell you why. Even in today's world of AI, the reason why solo founders raise money 60% less. The data, Paul, is that solo founders raise money 60% less than teams. It's not because they're not good people, and it's not because they can't build product. It's really because of the risk. The biggest reason why startups fail is because it's not because they run out of money, it's because a founder quits. Well, if you have a solo founder and the founder quits, you're screwed, and all the investors lose everything, and so does the founder. Whereas if you have a team, there's a chance that that team can continue the company. That's one of the reasons why investors are hesitant to back solo founders. So for those that are new to the room, welcome. I'm Steve, the Hands-On Angel. This is Founder Fundraising Feedback. And if you've been here for a while and you want updated tips and tactics on where to fundraise, where to find investors, I actually have a free newsletter. It's at the bottom left of the screen. It's this yellow up arrow right at the bottom left. Click on that. You can grab a copy of my free newsletter. I always like to give a gift to people that come to my live to listen to me yap. So it's right here. It comes out every Wednesday. All types of tips and tactics on where to find investors, what a good pitch deck looks like, what investors look for. Grab a copy. It's right here, bottom left of the screen. And thanks so much for being here. What type of businesses do I invest in? 80% of what I do is B2B, 20% is consumer. Everything I do is at the pre-seed stage, which is the first early stage venture round. The types of industries: sports tech, fintech, health tech, ed tech, prop tech. Those are probably the top 5 that I've invested in. It doesn't mean I won't look at other things. I do AI, SaaS, but those are probably the top 5 industries that I've spent time in, mainly because I have expertise in that space and I can provide ridiculous value to the founders. Thanks so much for your question. Based on your experience, what factors cause SaaS startups to fail or succeed? This is from 32A. 32A, thanks so much for the question. The main reason, the founder. If the founder is not coachable, first and foremost. If the founder cannot recruit ridiculous talent to help them along their journey. If the founder cannot sell, they can't sell employees to come work with them, they can't sell customers to buy from them, and they can't sell investors to invest in them. Those are probably the top 3 reasons why founders fail. Regarding portfolio companies, do you leave them to do their devices or do you offer technical support? I think I offer support in a number of ways. You know, what I like to be is one of my founders, and this isn't my phrase, it's one of my founders who called me and said, I said, you call me a lot or text me a lot. She's like, yeah, I was using ChatGPT. I just figure it's better to call you because you'll solve it faster. You'll make introductions and I'll just go faster. So she calls me Steve GPT. I hope I provide ridiculous value to my founders. At least that's my goal. What do you look for in a star? I don't get that one. Let's see. Can you schedule a demo? If you want to do a demo, I would hope you have paying customers. I would hope you have revenue because I am a post-product, post-revenue investor. If you want to schedule a time, there's a link in my bio. What do I look for in a startup? Is it IRR or EBITDA? I actually look for great founders solving big problems at scale. I look for founders that have paying customers. I look for founders that have growth. I look for founders that can recruit ridiculous talent to surround them. And I look for founders that can sell. Those are probably the biggest things. EBITDA is not really important, which is earnings before interest, tax, depreciation, and amortization. Because most companies aren't profitable at the stage I invest in, which is the pre-seed stage. So I look for those other things. Thank you so much for the question. If you evaluate companies on the regular metrics, then how will you see the big future potential? The people. It's always the founder. My 69 founders, 11 of which I've exited, are some of the most incredible people you will ever meet. I had one of my founders today on a call with an investor. She is a 4-time founder, 3-time exited founder, mother of 2, Yale grad, cancer survivor. She is a total badass. She is not afraid of anything. That's the type of thing that it takes. That's the mentality that it takes to be a founder. Those are the type of people I want to hang out with, honestly. How common is 10 to 15% option in pool in early stage startups? Coogan, great question. 10 to 15% is exactly the amount I usually suggest to founders. 10 to 15% is common. It gives you room to bring in additional employees. You don't have to worry about it. It's already called out on your cap table. That's the perfect amount, man. Would you recommend getting investors for an app that doesn't need employees to run? If you're telling me you're a solo founder, I think it's going to be harder than if you have a team. If you're telling me you have a team, but you don't need employees to run the app, yeah, I don't think that would be a downside. Can you talk us through one portfolio company where your involvement materially changed the outcome? Sure. The one I was just talking about. My friend Christina, her company is called Edify, Ediphi. Christina is the 4-time founder. She's awesome. I met her through the Capital Factory in Austin, Texas, almost 4 years ago. I know her husband, her kids. Capital Factory called me. I do deal flow with them on a regular basis. And they said, Steve, we have everything you love. I'm like, what do I love? They're like, we have an underrepresented founder, multi-time founder, went to Yale, badass founder, builds great product, has $1.5 million in revenue, and she's profitable and wants to do a raise. I go, what's the problem? They're like, she doesn't know what to do. She doesn't know how to raise money. She's never done it before. She's only bootstrapped, and she has no network in the US. She just moved here from the Philippines. We think you could help her. And over the last 4 years, we raised first of all, I got her into Techstars. I'm a mentor in residence with Techstars. I've been a mentor in residence for 4 years. I introduced her to the managing director in the program I was in. We decided to let her in. She got into Techstars. It changed her trajectory. She built out her platform. She went from 1.5 million bootstrapped to last year she did 3.4 million. This year she's on track to do $6 million. And we are raising a $3 million seed round, of which 500,000 is already committed. And her pre-seed round was oversubscribed 3 years ago. We went out to raise $1 million. We raised $1.5 million that I helped her raise. Now, I'd like to say it's all because of me. It's not. She's the founder. She's building the company. Did I have a hand in getting her into Techstars, helping her raise a round, introducing her to her lead investor? Absolutely. And I'm very proud of that. But we win together. My interest and hers are completely aligned. But that's a great example of a founder that we've aligned on their goal. I've helped them, they've helped me, and we won together. I want to pitch you. What's the process? If you're ready to pitch, meaning you have a product in market, it's growing fast, you have paying customers, there's a link in my bio if you want to grab a time. First time here, I built a great SaaS platform for South Africa SMEs. Need investment. Well, you want investment. Do you need investment? That depends. It depends upon if the product's in market. Is it growing? Are people using it? Have you figured out the monetization strategy if people are willing to pay for it? I would argue those are really important things to figure out before you ever go for investment. It's the biggest mistake I see in early stage founders. They want to raise money too early, and what ends up happening is they raise too little money at too low a valuation, and they give away too much of their company too soon, as opposed to leaning into product, talking to customers, and growing organically. What does it take to get you on my team? What does it take to get you on my team? I think you have to be building a badass company, solving a big problem in a space that I know about, I care about, or honestly, I can help you. I mean, I'm not a passive angel. I am an active angel. The reason I'm called the hands-on angel is because I get actively involved in the companies that I represent, helping them not just raise capital, helping them with customers, strategic partnerships, service providers. If they need a bank, if they need a lawyer, if they need a dev, I'm actively helping that founder grow. That's really the types of founders I want to work with. What do you feel is the proper number in revenue to approach investment? Great question. It's a number and it's a feeling. Look, if you can get to the first 5 or 10,000 a month in revenue and it's growing month over month, for example, if you're at 10,000, but 90 days ago you were at 1,000 and it's growing double digits month over month, and your wait list is huge and revenue's growing and cost to acquire customers is down, that's probably a good time to think about it. If you've got a couple users and a couple $100 a month in revenue, you're probably too early to think about that. So something has to be happening in the business for you to say, oh, this is a great time to get an investor. That's what I would suggest. Have a consumer app with 80,000 free users, congratulations, but no paid product yet. Can I still raise? Jeremy, great question. Jeremy, the downside of consumer is investors, myself included, will put a disproportionate weight on paid users versus free. So if you have free users only, you're going to need a much larger number of users, in your case 80,000, than if you had paid users, you might only need 5 or 10,000. So it's not that you can't raise money, it's that investors are going to ask this in their head. Why hasn't he flipped the switch? What's going to happen when he does? Will people pay? Will they churn? Like all of those questions. Whereas if you had a paid version or even an upgrade version, you might have a lot of those questions answered already. That's the main reason why investors might be hesitant. But I have seen people with unpaid platforms with massive user counts be able to raise money. What types of industries do I invest in? Pre-seed stage, so the first real venture round. Industries, health tech, things like APIs that connect wearables, fintech, financial services, ed tech. My father was a principal for 35 years. Sports tech, I'm a former college athlete and live in a rabid sports town. Prop tech, real estate. Those are probably the top industries that I invest in. It's not that other industries are bad. What don't I do? I don't do cannabis, I don't do FDA approval, and I don't do biotech, and I don't do a ton of hard tech. Let's see. For those that haven't grabbed a copy of my newsletter, it's this yellow arrow at the bottom left of the screen. Just click on that arrow. Comes out every Wednesday. It's free for founders. Tips, tactics on where to raise, how to find investors, what should be in your pitch deck, examples of founders that I've raised with, that I profile. Grab a copy. It's this little yellow up arrow bottom left of the screen. And my gift to you as a thank you for being here. What do investors look for? Let me give you what I look for. I think it's pretty common with most investors, but let me give you what I look for. First of all, I look for founders that never quit. I look for founders that have a tenacity and are willing to get knocked down every day, get up and do this again. That's number one. Number two, I look for founders that can recruit talent, because you can't build a venture scale company on the backbone of one person. You need people around you. It takes a village. So I look for founders that can recruit talent. And number three, I look for founders that can sell. They sell their asses off. They can sell customers to buy their product. They can sell people to work at their company, and they can sell investors to invest in their company. Those are the top three things that I look for as an investor. Can I discuss how to evaluate the company, how to value the company? So at the stage that I play at, which is the pre-seed stage, I would say most companies are valued at $3 to $10 million. Most companies are raising $250,000 to $2 million, valuations of $3 to $10 million. Most of the time they're doing it on a SAFE, which stands for a simple agreement for future equity, the Y Combinator SAFE. That's 90% of the deals I see at the pre-seed stage, which is the stage that I play at. I hope that's helpful. Someone asked, how do they reach out to me? Pretty simple. I do a limited number of one-on-ones every week with founders. There's actually a link in my bio. Just check it out. You can click on that link and schedule a time. What's your advice for consumer apps? No subscription. Build user-generated content. And I would do it every day. I would cut it up yourself on something like CapCut. I would post it on the social platforms like TikTok 3 times a day, 5 days a week. I would vary the CTAs, the call to action at the end. It could be link in the bio, here's our website, grab a copy of our beta. That's what I would do. How common is 10 to 15% employee pool at the early stage startups? Very common. In fact, I would say that's the standard. When a founder asks me, hey, Steve, what should we do for our employee pool? I tell them 10 to 15% max. So as a first timer, when sending you my idea, do I send a proposal? How do I send it to you? So if you're a first time founder, congratulations, welcome to the club. But if you don't have users, if you don't have a product, if you don't have paying customers, I'm not your guy. I just want to be candid with you. I invest in post-product, post-revenue, pre-seed startups that have a product in market, they have users using that product, and they have paying customers. If you're at the idea stage, one thing I can give you is I built a course. It's a 4.5-hour self-paced course on how to think about getting ready for fundraising. It's called the Funding Accelerator. It's available on my website, handsonangel.com. That would be my best guidance. I just don't want to waste your time thinking that I'll invest in something that's not established yet and is still at the idea stage. Are you ever first money in? Jeremy, great question. I don't ever lead rounds. Have I helped founders find their lead investor? Absolutely. Which was the first money in? Absolutely. But my investment group has done checks. The minimum check we've ever done is $50,000. The largest check we've ever done is $400,000. In most cases, that's not enough to lead a round, so we tend to follow once the terms are set. Having said that, Jeremy, in most cases at the pre-seed stage, which is where I play, most people are using a SAFE. It's a party round. The terms are set by the founder. So there's really not typically a lead at the pre-seed stage. Great question, by the way. What about startups that are pre-revenue? Do you consider investing in them? I've only invested in one startup that was pre-revenue. I have 69 portfolio companies. I've invested in a pre-revenue startup once. It was a multi-time founder. Prior to this, he built a $1 billion brand. He was building a brand in the same space, and I knew the founder for 2 years. So to me, it de-risked the investment. He's done it before. I was betting on him being able to do it again, and I was able to get 10 of my friends to come in on the round.